Good evening, ladies and gentlemen. This is Clue Trading. Frank, it's approximately 8:35 p.m. Eastern Standard Time. We have some great members here in attendance. We have Walter Phoebus, and great last name. I'm going to tell you that. It's not a Hollywood name. And we have Dano, the man, the fighter. And I'm going to do a quick, very quick, brief webinar. I hope I keep it within couple of minutes. I have my great friend, Mr. Harrington, Mike, B. Badger, here too. I'm very happy. And just to keep people appraised of what happened tonight, because I think it's very important, and people should know about it. So let me start. Um, Approximately 8:35 p.m. Eastern Standard Time on June, I believe June 28th. I'm losing track of time. 2018, on a cloudy, somewhat rainy evening here on the New York City, New Jersey waterfront. Um, Session will be recorded, uploaded to the Clueless Trading YouTube channel. Small plug that I always give. Um, Tell all your friends, colleagues, family, friends, pets, whoever that matters, who has any interest in the financial markets, please tell them to visit Clueless Trading YouTube channel and follow that, as well as the Instagram account that we have created, which shows some absolutely brilliant charts and performance results on what we do here at Clueless Trading. So please go ahead and do that. It helps us. We'd like to get above 1,000 followers in the next week to a few weeks. So your assistance is greatly appreciated. Thank you. Okay. Full disclosure, this is purely for financial education, not for any solicitation or advice. And we shall begin. So bottom line is we had a very critical juncture in the market, which wasn't really amplified that much in the media till today, which was the bank stress tests. Now, these are extremely important because the banks and financials, whether it be Bank of America and Goldman Sachs, that we alerted right on the ball tonight, and today, and they were already up by the time that I alerted them, and all other banks and financials that are in the uh, uh, part of the XLF. You have to keep in mind that these are a large component of the S&P 500. So when I'm showing my charts, which I will in a minute, behind me, the S&P 500 futures and the SPY and the SPX and such, you got to keep in mind that these are the hidden factors that are driving markets higher or lower. We have had 13 days, as the media kept on talking about, 13 days. I believe today was the 14th day of a negative fallout on financials. It hasn't happened since, I think, 2008 or something, they said. Wow. You know, no wonder things stayed down. Not just that, Boeing was another example, which I loaded today, and we're doing well on that. And it's got a nice upside to recover, which means those options are going to double. So bottom line is the bank stress tests are what the Federal Reserve Bank does, and we had the first of those stress tests a couple of weeks ago. But this one was a critical one because what it did was it gave the Federal Reserve on Thursday gave a clean bill of health. It's like going to your doctor, okay, and you don't have cancer, or you don't have diabetes, or you don't have this and that. To most of the largest American banks, allowing them to return money to shareholders, i.e., dividends. Okay, and then Goldman Sachs and Morgan Stanley to freeze such payouts around last year's levels, which is fine because Goldman Sachs is still up. And it says here the Fed said all the nation's very biggest banks passed the second round of the test. Now, what is the second round? Well, I don't know if it talks about it in this article, but which I'm showing you right now. But the bottom line is this is for excruciating circumstances, i.e., unemployment at 10%. You're talking about my good friend Donald losing the elections. Um, you're talking about inflation at 5% or higher. You're talking about some really stressful situations with the market, interest rates going nuts, the 10-year government bond yield, instead of sitting here at 2.84%, moving up to 5%. Imagine that. Most Americans have mortgages. Most Americans have credit cards. Majority of Americans have auto loans and all kinds of stuff. It would be a disaster. You're talking about an economic stress situation. That's what they tested. It's called a sandbox. In other words, when you test a website, for example, in a sandbox under simulated conditions, that's what the stress test is all about. So I wanted to let people, my members, know that this is a significant event. Okay? And the fact is that they passed the second round of the most strenuous stress test. It's like going through a Marine boot camp or a Clueless A training boot camp. You're going through the second level where you're finally getting it. You're getting my charts. Well, they passed. So this is where we are. So on a technical basis, at this point, from what it looks like, even though it's a very convoluted chart, like I said, a complex W formation, looks likely that we are going to, at this point, and of course, barring China crash again, which China is stabilizing. I just put out the Hong Kong chart right now, that Hong Kong markets reversed at 3 p.m. our time. It's a good signal for the global markets with a hammer reversal. Don't forget the hammers. So even though if we zigzag around, it looks like we are going to hit at least the first point of contact, which is 2748. Not a heck of a lot, but still pretty damn good. That's 34, 35 points from here. You're talking about roughly 200 plus point rally on the Dow. There's a lot of risk out there in the market. We know that. I will tell you that Donald was great today. He wasn't making any stupid comments. He was at the Foxconn opening in Wisconsin, where good old JB's from, our good friend and trader, JB. And you're talking about the fact that you have President Trump energized, and that's a good thing. And the China tensions are never going to go away. Fixing the problems with China is a multi-year process, even though us as humans, we are always what we call recency bias. That's a big word, and I'm going to write it down if I can with my mouse. Recency bias. What that means is that we're always focusing on what is happening every minute. I'm guilty of that. But recency bias causes us to lose the big picture of where the prize lies, whether it be Regeneron, whether it be Sarepta, whether it be CMG, when it ran up from 280. Yeah, it had a little pullback today. Big deal. We actually bought the lows. Whether it be Ulta Beauty, whether it be so many stocks, even Netflix from like 200. Where's Netflix right now? Went to 400 and change. Still hovering around there. So recency bias causes us traders, human traders, and we're all held hostage to our emotions, some less than others. I try to keep my emotions at bay, as I did yesterday in that big sell-off after making those big gains off the bat in the morning, the big sell-off. And look what happened. The markets bounced at one point close to 200 points. 2400, 308. Yeah, we bounced close to 200 points. Lots of profits to be made. And then it pulled back a little bit. Gave back 100 points of that. That's volatility. That's why my charts are there. So The bottom line is this is roughly 200 points. And do we think we get there by tomorrow? Who knows? We might. Do we get there by first part of next week before July 4th? I think so. Do we think we have a massive crash? No. Before July 4th? I'm not going to say no, but I'm going to say it's a low probability event. So recency bias, as I just wrote it down here, is something that we have to fight all the time. We cannot always focus on the noise that's directly in front of us. We have to keep on looking at the swing charts. So based on that, right now futures are down about 1.25. Does that mean the end of the world? No, it's right here. This is a 1 hour chart. The next one is a 15-minute chart. Everything that I said on last night's video, which you guys hopefully reviewed, happened. We're down here. We went up here. Should have taken some nice profits on a multiple trades on this move. And now we are doing this. Now, do you think we're going to crash and burn all the way to 2,700? I doubt it, but it's a low probability event. And this is where we are right now. And this is a live chart. So far, it looks like an inverse head and shoulder with the left shoulder here, the head here, and the right shoulder, left shoulder here, and the right shoulder here. So if we pull back here to retest the downtrend line breakout, this large one coming back from a couple of days ago, then don't panic. We'll see what the reaction is out there. In the meantime, we have selected stocks which are doing great. Look at Nike, the earnings trade. The options at $2 and change. You couldn't buy one? The thing is down almost $10 or $8. Your options you'll be able to sell at $800 plus. If you put 2,000, you took out 8,000. Seriously. All right? That's why we do earnings trades. I'm going to mention something about that at the end of this quick webinar. So that's your 15-minute that you're looking at, the immediate noise, or what we call the recency bias. Because as humans, we're always focused on what is happening right now. And very successful people in the world try to cut out the noise and focus on the big picture, regardless of all the obstacles that come along on the recency bias, i.e. today or tomorrow. So let's clean this out. So here's a picture of the swing chart, which removes the recency bias and gives us a visual idea how to make shitloads of money, as we say in New York. Excuse my French. I apologize for any offense meant. But crap load of money if we stick to the swing charts. So on this note, and as I repeated repeatedly, we are looking at this macro uptrend line. Guess what we did? We did reversal hammers repeatedly, even yesterday. And we came back into this line, into this channel. It's a pretty damn good thing. Now, what supports it? That's important. It's not just a reversal hammer and a green candle. It is the fact that we are seeing an actual daily crossover up, which we have seen a few times, which are monster swing trades. Monster, where you put you buy a $4 option, the SPX, and you sell it at 30. As long as you have the gumption and the grit and the tactical focus to stick with it and add to it as it moves forward in between, back and forth, intraday, as well as intraday. So every time we have gone down to these levels, we have had a severe bounce. I'm not saying this was big, and we were there. This was when you could buy $4 calls on the SPX and they went to 50. You're talking 1,000% gains beyond that. So you put 4,000, you took out 50,000. When was the last time you guys did that? It happens. And the only reason that the majority never catch it, because they are stuck with the recency bias and every little tick tock monkey on a hot tin roof stuff that happens intraday, they stay focused on that and not on the swing charts. I'm not saying this is going to happen. It might. Donald's doing a pretty phenomenal job. He's actually sticking to what I think he should do. And I criticize him when I need to. That's my privilege of being a New Yorker because we love New Yorkers and we love the President of the United States of America, despite his many faults. So, I'm not saying this is going to happen, but even here, and look here, and look here. Is it possible? It at least does this, where the upper end of the megaphone is engaged and retested at 2780. We go from 2700 to 2780. We are talking about 490 to 500 point rally. Not in one day, multiple days on the Dow Jones Industrial Average. What does that do for the calls that you bought at the bottom that I alerted yesterday and today? Of course, you have to buy time because an option has an intrinsic value and a time value. So if you're looking at July 6th, fine, then roll them out. Unless there is a massive breakdown on the charts, in which case you have to be flexible and readapt. That's what we do at Clueless Trading. We don't trade our opinions and emotions. We put confident probabilities out there. And if it doesn't work that way, because we don't control the world or the markets, then we change direction accordingly. But to be dogmatically bearish when the markets are telling you, and the internals, the simplest one, the STOs, are telling you that it's turning, and I've shown multiple charts on that all through the day. And some members, great members, I'm not going to name names anymore, who keep on misinterpreting the charts to fit their buyers because that's what they are in, i.e. short on a day that the markets want to go higher. Well, it doesn't serve any purpose. I've been there before where I try to fight the markets and the internals and my charts. It doesn't work. And I've lost money. So at this point, at least, the levels, 2747. This is where the breakdown happened, which was on 25th of June, right? The big one. And that was 2750. What's the level? Well, you see my charts. 2757. Scalp them. Because once it hits there, you don't think there's going to be a pullback? Of course it will. Aren't there pullbacks along the way when we get these big frigging moves where you buy a $4 call? I repeat, I don't pick that number at random. Most of the time, that's what they're priced at. And aren't there these type of candles? Of course. So you want to take your profits here, or most of it, or all of it like I do. And if you start to see this candle building, you either go short intraday. Don't keep shorts too often overnight. Doesn't work. I've done it. It doesn't work. We're in an uptrending market. We're not in a bear market. Look, read the facial recognition. Read what good old President Trump, the way he was speaking about China. China, right? Like I said last night, it sounded like Trump. Okay? Foxconn is a Chinese company which assembles all the iPhone parts. Remember, it's designed here, assembled in China. Foxconn opened one of the biggest plants in the world in Wisconsin. Good old JB's hometown. What do you think's going on? Did he go on blast China today? No. It's hardcore negotiation. Sometimes I agree, sometimes I don't. But hey, it's his style. So don't go over crazy short. Because it won't work. Unless we see a real technical breakdown. And my charts are all there to show you that repeatedly. So this is good for now. The full stochastic crossover worked every single time. Yes, you will see vacillations, little like that. before it gets up at least to 2756. And if it breaks the upper megaphone, then we have upper levels to contend with. Nothing in life moves in a straight line. Everything is algorithmic, full of little potholes, full of volatility. Only thing linear in your life is the fact that you wake up in the morning. And thank God for that we do. Nothing is linear. Linear is having a nice cold brew or a nice glass of wine. That's straightforward. You're enjoying it, you're taking it down. Aside from that, nothing in life is easy. Nothing in life is linear, neither are markets. So this fundamentally critical technical chart that I produce and I keep on showing every day, if you all don't get it because of your recency bias, because of whatever, and you keep on misinterpreting it as some members do, because they hopium. A member said today, it happened yesterday. I said, are you serious, dude? It happened yesterday. So obviously what that tells me, that person is not at all, regardless of his posts, is looking at my charts. What happened yesterday is yesterday. Now things are changing. I'm showing that repeatedly during the day. Multiple profits were made. SPY, SPX, even though I didn't learn directly, I traded them because I want to teach people something. You have to take responsibility for your own trades at certain times. That's what we do at Clued Trading. I can handhold you through every 15-minute thing. That's why I have the charts. You could have bought some calls today. They'd be up 40, 50, 60% off the lows. Because I'm constantly guiding people through a complex market by showing these charts, which are pretty even a child can read. You know that. And I put some of them out too. So that's it. And so the bank stuff is pretty damn good. Stress test, like I explained before. And at this point, this is also a daily chart of the actual S&P 500. We can be looking, it looks like, at least, if the algos weren't going, are on crack, all right, and on bath salt, then we would normally do this. I think we do it. Gap fills. Who creates charts like this? I know you guys are, much of you guys are in different services. There's smart people out there, but they're always following the same old rules. No, 10-day moving average, blah, 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 blah. I'm showing you visuals that you can trade off. A child can trade off these. These are gaps. Is it possible that we pull back here a little bit? Fill the lower end of the gap at 27.10 while the media screams and shouts, oh my God, that's it, it's the end of the world. All it did was pull back to the lower end of the gap from where we closed at today at 26.17. So if we drop down to 27.10, that's roughly about 40 to 50 points. Does it mean anything? No. The stows are cooperating. We know what the gap fills are. Now, if we fall below the 2700 level, in that case, this lovely W formation is no longer valid. And we will retest the 2670 level, which at one point today, it looked like it. That's why I bought those small hedges. The SPY puts did not work. That's why we buy those lottos. So I got bailed out of them roughly with a 60% loss while making a decent sum of money on multiple long trades. That's what real traders do. A hedge is not supposed to be more than 10%, especially in a volatile market, or 20%, whatever number you want to use, of your overall trading money. In my case, far less than that, because I'm not committed to that hedge, but I like to have it just in case. A bad tweet, a bad comment in Wisconsin would have done it. And I know the Bears wanted it, they didn't get it. So at this point, we are basically looking at something like this. And once it gets here, the breakout level, the 2751 level and stuff, of course there's going to be turbulence. Now, the bullish picture is the same stuff happened on at the end of May. Okay, of course, it started from all the way at the bottom, but this was the 29th. That's the gap that we filled and bounced off. And this is what happened over the following weeks going into the first part of June. Is it possible that we do that? Of course. Now that says a lot because we're getting back up to 2,800. You're talking a crap load of money. Of course, along the way, there's a lot of zigzags. And that's something that the majority of members and retail emotional traders just never seem to grasp because they all are focused on one thing. What's happening right now over the next 15 minutes, called recency bias. Google it. It is the worst enemy of seeing the price on the other end of the tunnel. But as active traders, we have to always watch everything. So my job is to show you both the longer term charts, intermediate term charts, the short term charts on the 15 minutes so that we are not caught flat-footed and walk into an ambush, because that's what Algo HFT, black box, supercomputer programs do every single day. Anyway, coming down to it, this is the major level here. That's also the upper end of the megaphone and the downtrend lines. We'll see the reaction. There's a lot of stuff going on out there, guys. I'm just trying to help. On that note, have absolutely a beautiful evening. We have some great stocks in play. I'm not going to keep on naming them because they're all in the Twitter feed. And one quick thing that I promised I'd say before. If you want to jumpstart your portfolio, whether it be a few $1,000, a few $100, okay, or larger, you gotta take some risks. And those are called earnings trades. We have Nike. Those $2 options are going to be at 10. You could have made 500, 400% on your money overnight. I have shown these repeatedly. Whether it be Darden Restaurant, where $3 calls went to 16. Okay? You don't need to put much, but it jumpstarts something, your portfolio if you're stuck in a rut. You don't want to do that. In my opinion, that's called stupidity. Now, did I go nuts and buy Nike? No, I bought little. I wish I bought more. I have another one coming up tomorrow, which is what's it called? STZ, ER Trade, Constellation brand. All the restaurants, the whole works. Hopefully that one has a high IV. STZ has an IV of 10 plus. That means it's like, it's like betting. Remember, option trading is like betting. The odds are high. Those calls go. They were roughly about $6 in the money. They're going to be banded. If they don't go, they're July 20th, 20s, and we're going to be fine. I'm going to cost average. It's a serious company, and we made a ton of money on that last time. If some of you remember, calls went up 400+% overnight. STZ. I'm going to try to show you the chart if I have a minute. So I have the tick chart here, looking pretty damn good. I'm going to show these more often now. Remember, the tick was minus 1188 yesterday. And that normally connotates a short-term bottom. And look what the market did. It's not rocket science, guys, because I'm not a rocket scientist. I try to make things simple. Because if I was a rocket scientist, some of you don't even get my basic charts. Imagine what if I put my really complex charts out there, what you guys be doing. So let's look at STZ, Constellation brand. Okay, these are aftermarket prints, which are fake prints. The earnings don't come up till tomorrow. So I'm going to look at a daily chart. You look at a daily chart of this baby, and it looks pretty damn good. Now, does that confirm that the earnings are going to be fantastic? No, but it just gives me a level of confidence. So let me take this out. Let me take this out, take this out. And let me just put it this way. That, my friends, is a powerful chart. That means big money is buying, because the last time you heard one of your buddies say, "Oh, I'm buying a lot of Constellation brand," was never. This is the institutional play. And institutions were accumulating. Patterns are intact. There you go. That is it. Absolutely beautiful. This is daily chart, okay, of an inverse head and shoulder. If the breakout does happen, the stock is going to be up more than 10 bucks. And those $6 calls are going to pay the bills nicely. In the meantime, Nike's already paying the bills nicely with a few shares and the calls in place. Right there. That's your channel. That's the reason why they said the IV, or implied volatility after earnings, would be 240 or so, because that's where the upper end of the channel is. So if you want to jumpstart your portfolio, you have to take, I don't care. Sometimes I buy 1 or 2 calls and I'll buy a basket of them. What do you think? I go nuts? Sometimes I wish I did, because I'd be up, 30,000 bucks the next morning. But I don't do that. I buy a basket of my earnings, 1 or 2 calls each. Some of them fall apart. A lot of them just go through the roof. So guys, if you have any questions, feel free to ask me. Just want to wrap up. Want to keep this short for everyone else to listen to tonight. And any questions, please? Yes, no, maybe. Okay. This is what we have in the S&P 500. No questions? Mike, Walter, Dano? Okay, fine with me. If there are no questions, that means I'm doing a pretty damn good, terrific job of relaying the message of what's happening with the markets, and you guys are in line with that, which is good. So bottom line is, this is your S&P 500. This ain't Grandpa's market. Big hump. Looked like it was going to go to 2675. That's why I put those small hedges out there. No, no, no. There's a downtrend line here. There are multiple. That's why technical analysis is such a beautiful science. It's not a science. It's more of a art/science. We're starting to see the beginnings of the rumbling. All this is happening on the context of the vibes coming out of the White House. Good old Donald. The China tension starting to ease a little bit. What do you think? You're going to get the headline saying, "Oh, we just love all the tariffs. We're going to put all the tariffs down, blah, blah, blah." Of course we love China. They're great people. They're a great trading partner. They're a very smart, innovative nation, creating some of the best companies in the world. But we're still the leaders. She's going to steal the technology. We got to, play hard. But saying all that, they get the message. So, bunch of things going on here. So here was so a bear will look at the fact like, okay, it's definitely going down here, and after that it's going to fall to the bottom of the channel 2667. It's going to break that. That's bear talk, dogmatic bear talk, not tactical bearish talk. And we have some members like that. That's fine. I'm only here to help them, to take them out of the misery of being bearish all the time and losing out on the monster long gains that we do. And it could very well get there. Low probability before July 4th. Might get there. In the meantime, a downtrend lines were engaged right there. You saw that. And a nice bullish candle formed. Not enough for a confirmation, but then these days with the fast-moving algo HFT black box supercomputer programs, you don't get confirmation. Somebody said today, well, if this market doesn't get to 27.21, I'm not convinced. And I answered that person by saying, I'll be selling the heck out of my calls at that level, because that's what we do as tactical traders. By the time they feel comfortable, it's going to be too late. because the market will pull back and then possibly break about 2720, 2721 on the S&P 500, in which case the market did go to 2724 on the S&P 500 at the top today, and they weren't convinced, and we were good. So we're attacking the 50-day moving average. You see that? You all have screens. You're all using some sort of platform. So please feel free to look at them right there, right? And it's a nice bullish candle, not a bullish engulfing, which would be something like this. We didn't get that. It's okay. This we're getting, which is exciting me, because once this starts to turn around, you're going to get those 300-400 points up to fill this nice beautiful gap at that 2750, 2756 level. It will affect every stock that we own, specifically the Boeings and the Nikes of the world, which are the Dow Jones Industrial Average stalwarts. Enough said. Learn the skills. If you're having difficulty understanding my charts, sign up for the advanced coaching sessions. Do it. Those few $100, very little, few $100 you're going to spend. I'm not begging for your few $100. That's not what makes my money. What makes my money and keeps me solvent and keeps me paying for our cars, for our houses, and my nice living. And I'm a pretty conservative guy. I don't go out there partying till like 4 in the morning. Is my own trading, family trading book. Not those ACS sessions, which I spend hours and hours working with people, and certainly not the minor amount that I charge to be on my service. I love you all. Try to be smart. Try to be strong. Try to be, like I said, that Marine saying that I put out there on the video yesterday. Devil said there's a storm coming, and the Marines and the tactical traders said, I am the storm. Be the storm, guys. Stop being the sheep. Stop walking the walk of shame. Take the risks. Understand what we're doing. And overcome all obstacles that come your way. Try to make some serious money. Have a great evening, guys. God bless you all.